Hi guys, I'm just going to ask a very simple question, right? Are you one, very new to trading and it hasn't quite twigged for you yet? Or two, have you been trying this for some time and still can't find that kind of winning formula, right? They're the two kind of key things that I'm seeing. I'm spending a lot of time at the moment on things like Reddit and Medium, just kind of social media in general. And I'm kind of seeing the same patterns over and over again, right? So what I want to do, I want to give you guys something very, very simple, something very mechanical, something that you can repeat kind of over and over again without really having to spend too much time to assess the charts, right? So, a couple of things that I've taught over the years has been to simplify it, right? Less is more. Now, what I'm going to do to start with is just show you how some of these pieces actually come together, right? Now, a lot of people seem to struggle with the basic understanding of this, right? So let's just assume the market comes down into some move like this, right? We then ultimately come back, we do something like this, and off we go, right? A lot of people who either look at things like smart money concepts, Elliott wave, Wyckoff trading, some of the other techniques, moving averages and RSIs and this, that, and the other, right? A lot of the problems with a lot of what you see online is everyone has their own opinion, right? Everyone has their own kind of ideas. The issue for me with a lot of that, especially when you are very opinionated in one method that is that it's kind of this way or no way, right? And when you start to understand how a lot of these things fit together, you're going to be amazed of how easy this can be, right? And I guess for me, a lot of people seem to overcomplicate something unnecessarily, right? So let's just assume, we see this market and this is our top. Right? We then ultimately come on down, we pull back and we drop down, right? A lot of people will see this from an Elliott wave perspective as a simple A, B, and a C in terms of a corrective move, right? Now we can get really fancy, really technical. We can add things like a, fib extension, for example. We can go from the top, come down to the A, back up for the B, right? And what we can do is we can measure, these types of levels, right? 1618 is a key popular kind of level. And we can get an understanding of where the expectations are, right, for a move something like this. Now, that's great. That's kind of fine. Again, from an Elliott perspective, it, it can be not as accurate as maybe you'd like, especially when you're newer to this and you haven't really understood the statistics side of this. Right? Now, if we look at what's actually happening inside, what we're going to find is that there's going to be an awful lot of volume within this region. And that's just kind of natural. And the reason for that is that price has kind of gone sideways a little bit before working out that final drop, if we drop into a smaller time frame. Now, again, putting the kind of pieces together, if I was to draw a volume profile on this, what we might find is that we might have some heavy volume up the top, very low volume coming down, and then all of a sudden the volume actually kind of spikes up. Then we kind of drop back down to nothing. We get a big spike again because ultimately we start to see a drop down. Then we come into nothing until potentially we start to see the accumulation phase, right? So we're going to see accumulation in here. We're going to see distribution in there. And we're going to see things like a spike down here, right? Based on another move inside doing this, okay? So this is how a lot of these things kind of come together, right? Now, if you're not talking Elliott and you're not looking at things like Wyckoff, you might have heard of something called smart money or smart money concepts. Now, a lot of people will kind of lay claims to this, but again, these are things that are just kind of intertwined in the market, right? There's no real somebody invented this or, all that kind of bullshit in terms of marketing. These are things that happen for very specific reasons, right? And these are the kinds of like levels of depth that you can get to if you really want to, okay? A lot of it comes back to volume. A lot of it comes down to understanding the volume. And therefore, we can kind of dig as deep as we really want to dig. However, if we know from an Elliott point or a smart money perspective that we've actually got some kind of an accumulation move in here, right? We don't know at this stage whether or not we're going all the way up or whether we're likely to come up so far and fall back down, right? So this is kind of the difficulty, which is where some of these tools can again overlap even further to refine or help you refine when you kind of start digging a little bit deeper in terms of the ins and outs, right? So with all that being said, if we look at what actually happens, we understand that the volume that we create here and the volume that we create, in and around here are going to act like magnets to price, right? Now, some people will call these things like, oh, it's an order block, oh, it's liquidity, or it's something like supply or demand, right? Again, a lot of these things overlap, right? They're not one thing specifically. There's a couple of different ways of reading and seeing, right? So it comes down to your style and what you really want from the market, right? Now, the next thing is, regardless of things like Fibonacci, whether this is smart money, whether this is a demand or a supply zone, what we can do is we can use a very simplistic kind of method, right, to break down, which will actually allow us to kind of follow the trend, right? So what we're doing is we're breaking down the kind of the reason or the rationale behind the trend without digging too deep, right? Without going into a lot of depth and a lot of, why, what, where. This is where the Wyckoffs and the Elliots and the smart money concepts and stuff kind of come together, is that you can kind of understand the reason behind the move. Okay. Now, if we think logically about a move like this, right, and this is where it comes back to, if we think logically, when we have a move from here, right, what's happened up the very top is that we've had some kind of distribution. This equals a lot of money, right? Money to push the price down. Right? We then drop down, and as we rise back up, we fail to make a new high, okay? Which means clear as day, the sellers are in control. Right? Now, let's just assume that we're out on a daily time frame, right? This is kind of a big time frame for a lot of you guys, especially if you're newer with smaller accounts. The daily is going to be almost the holy grail, right? The daily is the biggest, kind of movement that you're going to probably be looking at if you even come out this far. So what we see from a push down is we actually create the first low and we come back up, right? And then we create a lower high here, okay? Now, if you imagine zooming in to a smaller time frame, let's look at this on, say, a 4-hour time frame. What you're going to see on a 4-hour time frame is something that looks a little bit like an A, a B, and a C, right? Now, at this particular point, we again don't know whether the price is likely to drop down and continue on up, or drop down, come back so far, and go again, right? And this is where the kind of following the trend aspect comes into this. There's techniques and things like Dow theory, for example, that will give you, more depth in terms of the why, right? I'm not going to go into that today. The whole point of this is to kind of simplify it, right? So if we understand that we've got this big money pushing down, and we understand that big money has kept the price pushing down, it's not until this particular stage that larger money comes in to start pushing the price back up. Now, what actually happens here is on the way down, first things first, as the price breaches this level, right, we technically have a change of character. Right? Because if we see this as distribution, the chances are the prices come from here. Right? So at this point, we were up. And at this point, we're technically down on the time frame that we're viewing. Right? Now, there's nothing to stop us looking at the smaller time frame and saying, again, if we were to see this on a 4-hour time frame rather than this being the daily, we're going to see something like an A, a B, and a C inside here, right? Now, obviously, it gets more complicated with Elliott wave, but again, I'm not looking to go into that. All I'm looking for is where the character changes. The reason that this is a change of character is this is the first real area, right, that we actually see a new position put in where we failed to take out the prior high. Okay, so what this means is we've actually got a whole bunch of sellers up and around this level, right? And that's the kind of the area of interest. These guys have intent and investment on shorting the price. Okay, now as the price moves away from this region, we actually see the first move down. We don't know where this move down will actually end, right? And whether this is the end. We don't know if we actually come back up and we continue, or we come back up, drop down so far, and continue on back up. And this is where I guess a lot of people do fail. They actually fall down on the back of this based on trying to catch these tops and bottoms. So at this particular stage, we can confirm that we are in a downtrend. But until we come back down to this low here, are we only in an uptrend? Okay, so this is where you need to start looking to the left. Right? So we start to understand what's happening on the left. Now, once we've got an overall situation, we can step through this kind of one by one by one. Right? Now, at this particular stage, we don't know if we want to go up or drop down. And that doesn't matter. What actually matters is that on the smaller time frame, we can actually start to look at getting in on this trade. Right? When we see an A, a B, and a C, for example, and then we see the change of character on the smaller time frame. This will be ideal, optimal, if it is obviously inside a larger block or a larger area of interest, looking to the left. Okay, so you can see how this can be very simplistic, right? If you were to walk through the process with exactly the same set of eyes every single time, right? Now, if we look at what we're actually doing, what we're looking for, what we're looking at, as we break on through, it's not until we come across here that we change the character again back to the upside. Now, inside of this, we would have seen a 4-hour type move. We would have seen a 4-hour type move. And then we'd see more like a 5 move, right, if we were to carry on through. And this is because these moves are still corrective, where this becomes back impulsive on the fact that we failed to take out this low. So at this particular point, we now have an accumulation cycle that we can see inside here. There is clearly big money to push us. And if we were to take out this prior high, right, we now know that the buying at this level is much, much stronger than the selling at this level. Can you see how this doesn't have to be complicated? Okay. Now, if we were to look at moves, let me see if I can kind of put this into a different perspective, right? If we look at moves that may be a little bit more complicated, right? Let me see if I can get rid of some of these just to clean this up. If we looked at a move that was a little bit more complicated than this, right? What I want to do is walk through the next kind of phase, the next step, and say a similar thing, right? So this time we ultimately come up, we then start to move, we get our change of character kind of to the downside, we start to get a little move that looks something like this inside. Right? We can then come back in, and then we start to maybe fall down altogether. Right? Then we break something like this. Right? Now, the reason that I've drawn something like this is what you're going to see on a bigger time frame is potentially from this top, you're going to see the A, We're going to see the B. We're going to see a C. Right? Now, the reason for that is if we look at the kind of measurement there, we could be looking at the 100%. And if we look at the measurement from there to there, we're probably looking at the 1.61, right? That's supposed to be a 6, right? Something like this. Or the 1.217, right? That type of region, that type of area. So if we look at, 120 to 160% of this move, we got a rough idea in terms of what that is, right? And again, it doesn't have to be all the time. So don't think, oh, because it's there and it's going to be, this is just the concept, right? So what happens is we get this kind of first move, right? And this first move fails to take out the prior swing high. So the suggestion is there's an awful lot of sellers sitting up there, if that makes sense, right? And the reason for it is that we failed here. So again, if we was to drop down to a 4-hour time frame and we say, okay, we see the change of character, this change comes in here. At this particular point, we then come back in and we see a low being formed. At this particular point, we've got to change the character to the upside, right? What we haven't done at this stage is on the bigger time frames, on the daily time frame, we haven't made a new high. So what we're saying is that we're currently in an overall uptrend with an internal move to the downside. Now, if the internal move to the downside is going to do a couple of things, right? It's going to have its own internal structure. It's going to have its own internal kind of moves, its own internal plays. Right? We're also going to create master patterns, order blocks, auction areas, right? And all these kind of good things. Right? Now, the chances are, obviously, I've just drawn this freehand. The chances are you might see something like this. Right? Makes a bit more sense. However, when we start to put the pieces together, what we start to realize and what we start to notice is these internal types of swings, right, would suggest that the larger swing, the larger players have the control currently to that downside. Now, it's not until this particular point, around there somewhere, probably this one, right, in the way that I've drawn it there, but it's not until that this level is taken that this uptrend now becomes a downtrend, although we've seen this move inside. And the reason for that is until the change of character here, this could have easily gone one and straight through. So as you can see, I don't really need to predict where we are going, right? Because I'm following where we're going. And the following, rather than trying to predict this, means that I can work with the trend when the trend is in my favor, right? So let's just assume that I see this happening, right? And we get the first move on a daily. Right? Daily starts to pull back, daily comes up again, and the daily breaks through. Right? Now, at this particular point, I'm saying to myself, well, that's giving me a kind of pretty good indication that I could probably sell this market, right? Even if it's only for the internal structure. Now, I've got this level of data to kind of back up my entry, and I can use the 4-hour to say, okay, on the 4-hour, what we've seen is a move down, a move back, and a breakthrough. Okay, what's likely to happen is that we're going to get some kind of pullback move before we go again. Right? Now, I know I haven't drawn this on the freehand because this is on a daily time frame. But as you can see from a 4-hour time frame, the fractal nature of the move will actually give me a pullback. The pullback is something that I can then take based on auction areas to the left or the break of structure here. And it doesn't need to be more complicated than that. I can drop from a 4 hour and go 1 hour. I can go 15 minutes, right? And I can kind of add to this in terms of what I want to see, right? I could look at this chart and say, well, okay, anything that I'm trading until this point, I'm technically looking for buys, because my assumption is at this stage, we are in a daily uptrend. If we have a pullback, right, and there's no signal, because you're not going to see a change of character back to the upside, right, I would not be buying. The only place I would be buying is this change of character here, right? This change of character here. Right? Now, at this particular point, if I was to sell any of this, I would have been selling up here. I'd be selling on the change of character there. I'd be selling on the breaks there, on the breaks there, right? So as you can see, by following the trend, I'm not guessing any aspect of this. The other stuff that we teach and the other things that we show, the more advanced type stuff, is to kind of give you, again, one more layer of kind of depth and complexity in terms of where we are from an Elliott point, what Wyckoff's kind of telling us, where we are from a much bigger picture. We can then add things like the volume profile and master patterns kind of in addition to this, right? But as you can see, the general concept here is you're just following the trend, right? So I want to get rid of all of these, and I'm going to skip forward just a little bit into something, maybe the next kind of level, the next kind of layer, right? Now, again, if you don't really understand, what I've just shown you here, you've got to kind of come back to this again, right? And these are the kinds of things that I've gone into a little bit more detail in ultimately in the book. These are the kinds of things that obviously we show from a membership point within Discord. These are the kinds of things that I would regard as almost level one, right, in terms of the kind of the entry point to understand, why the market structure works the way that the market structure works. Right? The market's always chasing liquidity. Now, when you start putting the kind of the building blocks together, if you still can't see liquidity, the obvious answer is you are the liquidity. If you start to understand how these moves happen, and then you understand why they happen, it's going to put you on the right side of the trade a lot more than the wrong side, right? Now, another kind of example of this is if we do something relatively simple on this one, right, and then we come down maybe something like this. Right? Let me just think of how I would visualize this as a move, right? And then we have some kind of pullback, and then ultimately we come back down again, right? We can be, quite aggressive on a move like this, right? Now, what we're actually seeing is if you were to layer out this one more kind of level, one more kind of depth, right? You're going to see inside of this a simple consolidation. Right? Sorry, guys, I'm kind of doing this just in terms of how I visualize the chart, right? You're going to see some kind of consolidation, right? Then you're going to see the expansion phase. And then what you're seeing from the expansion phase is you're actually seeing the markup or the markdown. Right? So in essence, we've now got a master pattern technique with the expansion with a markup. Right? Now, if I was following this chart along, what I'm looking for is, regardless of whether we've come, from here, I've got access to this data at this point. Right? Let's pretend that we can't see anything right now from here. Right? Now, again, I'm going to use this as a daily time frame. So the daily's just dropped down. This could be obviously our A, our B, and a C. Right? We've rallied up. At this particular point, right, I can see that we're getting a bit tired. Okay, but I don't know if this is going to carry on up. So I can drop down to a 4-hour time frame, and on a 4-hour time frame, what I'm seeing is the first pullback coming in. Right? I can drop into a 15-minute time frame, and I start to see a move look like this. On our 15-minute time frame, if we do not break that high, And then we come down and start to see a move like this. What this is telling me is that the internal 4-hour time frame has had its A and its B going down for its C, which means I can take an entry somewhere in there short. Right? If ultimately we carry on up and we don't see the change of character, right? As soon as we get that break of structure there, the break of structure is actually a change of character. The reason it's a change of character is we were down and now we're up. Okay, so again, I'm working with the chart, I'm working kind of with the trend, and I'm looking at this to say, okay, what's going on, next step. Well, as we then start to rally up, we've got again another break of structure. Right? We failed to make a new low or lower low. Right? We now have a higher high. Come across to this point. As we come across to this point, we can see that this is currently our high. Right? Now again, we don't know anything that's going on over here at the moment. We want to be working with the chart. So at the moment, the downtrend and the uptrend. Now, if the uptrend, right here, breaks this over here, right, and this is higher, the chances are we need a pullback to continue on higher. Right? If it doesn't break this over here, we've actually got strong sellers in situ, right, giving us some indication, some clue as to actually what's going on. Right? So as we start to put the kind of the building blocks together, as we start to understand and unravel, what's actually going on. If I was watching this as a chart, whether it's a daily time frame, 4-hour time frame and so on, I can start to analyze what's happened on the left, right? So now all of a sudden, right, we're up at this particular point. What we're seeing right now is here, we're seeing a 4-hour probably do something like this, right? We can take this move down. We can start looking to the left, whether we've got, fair value gaps, whether we've got auction areas, whether we've got massive levels of liquidity, right? And ultimately, what you might find is that we got some fair value gap, or we come a little bit further up and we come into the area of liquidity. This is ultimately the supply area that will actually drop the price back down. We then fail to make a new higher high. So this is now a lower high. And then we come down and we break the structure again. This break of structure pushing us up. We fail to make a new higher high. Therefore, the trend is still down. We can play this trend until such time that gives us a pullback move on that smaller time frame. Right? At this particular point, we now have the change of character like we had over here. Right? So we were up and we were down. Now we're back to the upside. And this thing just goes over and over and over and over and over again. All right. So again, I hope this makes a lot of sense. Right. I've done a few videos now on this. If you haven't seen the last couple, go back to my last 3 or 4 videos. I've been stalking Euro the last couple of days. I've done this as well on Bitcoin. I think it was Tuesday or Wednesday. And this is kind of the general idea, right? So like I said, this is kind of level 1, right? This is kind of the entry point. This is something that will make your trading a lot more mechanical. It'll take a lot of the emotions and the stress out of how you trade. And then from here, the next level, the next kind of layer is ultimately adding those additional kind of tools, those additional pieces. We can talk COT data. We can talk about, Wyckoff. We can talk about volume profiles. We can look at master patterns. We can go into obviously the Elliott wave bias, the daily bias, right? There's loads of other things that can kind of come on top of this. But this is the entry level. This is the kind of step 1, stage 1 to kind of give you an understanding in terms of what the market is actually telling, what price action is actually telling you. All right. So I hope you enjoyed this one. Thanks for watching, guys, and I will see you on the next stream. Cheers all.